Chinese manufacturing rises in March, Asian stocks finish mixed, and as the market heads for the second quarter, U.S. stock futures point to a mixed open. I'm Chao Deng, and the morning call starts right now.
Good morning, I'm Scott Rudler, Chief Strategic Officer of T3Live.com.
And I'm Chao Deng with The Street. Together we bring you the Morning Call Express. Scott, what a fantastic first quarter it was. S&P finished up 12%, and pretty much that was the best quarter in a decade. So what are we expecting here as we go into the second quarter?
I think traders are going to be a little cautious, like myself. I know last quarter you could have had the foot on the throttle. You could have rode the 10-day, the 20-day moving average. You had stocks breaking out to historic highs. You had great sector rotation. So you can't expect exactly the same. You can't expect double-digit gains across the indices. So what traders want to see is what type of personality do we have in the second quarter? Can we digest the recent first quarter gains? Or do we get somewhat of a pullback? And if we do, is it shallow or is it a bit deeper, than most traders would like right now?
Now, some of the things you're watching: earnings, China possibly slowing down, and also news out of Europe, right, still?
These are the headlines that are going to be coming out, whether or not China will have a soft or hard landing. That's why everyone was so concentrated on the numbers last night with the PMI. I figure like my Twitter feed was going nuts last night as it finally came out, so such a hot topic it is. And then also you have the rumblings out of Spain, the rumblings out of Italy. Do they get Greece type deals? Can they handle it? That's why they increased their firewall. And then to me, it's really about earnings. It's really about what are the companies going to say and what's their guidance going to be, and are they actually priced in within the move that we just had.
Now, in terms of earnings, growth expectations aren't too high. We're looking at about 3.2% growth for this quarter, which is significantly down from 10%. That was the forecast last year. And this week in particular, we could get some negative pre-announcements, so it could be very tricky for trading. And I just want to hear your thoughts on that, and then jump right into the S&P 500 chart.
Well, it's always tough when you go into pre-announcement season.
Yeah.
You never want to be long one of the stocks that pre-announce. It's always a headache. But the question is, when they pre-announce and they go lower, does it reverse and go higher, and is it priced in? So that's something we're going to watch Composure-wise, and we're also going to watch whether or not when the companies actually announce, what does the street want to hear? Do they have to be in line, or do they have to raise expectations? It also depends where the stock has been and where you think it can go. Now, if we take a chart of the S&P, we'll see we're still in this methodical trend. So you don't have to jump to conclusions yet as, oh my goodness, we're going to correct, let's get out of the way, because if you look here, you'll see, we still have the same trends intact. We have the macro trend that's still intact. We'll look at the spiders here. Then you have this really intermediate trend that we tested once, okay, right around here in late February. And then we came in last week, but we went below the 10-day, above the 20-day. So now what I think guys want to watch is to see, if we continue higher, if we take out the old highs here, or, if we start breaking below Friday's low or even Thursday's low, you could see a bit more of downside action. So at this particular point, we're consolidating, but I think a step back is a little bit better.
Now, tech and financials were really strong sectors in the first quarter. So as we go into the new quarter here, are we going to see some kind of rotation into some of the weaker performing sectors?
Well, that's what we're going to look at. Tech, financials, home builders have been really strong with retail. If you take a look at the Qs here, you will see that the Qs are just coming into the 10-day. They didn't even get to the 20-day. So watch this 2-day pivot. If the Qs go below 67.20, you could see a bit more downside action. On Friday, Apple showed some relative weakness. So you want to watch that. Apple just gave back the 10-day, which doesn't happen often. So for traders, if we can get below Friday's low of 597.94, I think they're going to be looking to short. And I think at some point before earnings, we can come down and test this 20-day moving average, which coincides with this support, which is 580 to 584. So short-term, traders going to be watching to see what Friday's low looks like in Apple, to see if tech could get weaker or if it holds up the same.
Now, for financials, you say that this may be an opportunity to buy still. JP Morgan has been leading. Your eye, however, is on Bank of America?
Yeah, just because it has the upper pivot and it hasn't broken it yet. It got downgraded last week, and it looks as if it's coming under some pressure. If you look first at the XLF, you will see consolidation as usual, looks fine in this upper channel here, below the 10-day, above the 20-day. This is big support around 1540. Psychologically, though, if Bank of America starts breaking below this, just say 940 area, you could see some corrective type action. And psychologically, I think that brings down a little bit more of the banks, and obviously JP Morgan is the leader at this point, covering the 10-day. If it were to give up the 10-day, you then have about 44, and then I think it's an ultimate buying opportunity right here at 43.66.
Now, in terms of commodities, we have to talk about that since we're coming into a new quarter here. Gold, you say, has been forming some sort of reverse head and shoulders pattern, and that could be bullish in the long term, right?
Yes, right now we're just looking at it and it's developing. So for those with a forward-looking thesis that want to be long gold, that still think it's going to 2,000, which I'm not sure yet, look at this pattern here in the GLD. You'll see in an inverted head and shoulders pattern, which could be very, very bullish for those with a bit of a time horizon and a little bit of a risk tolerance. So if you look here, you will see here is the left shoulder, the head, the right shoulder. I usually pick these out. It's early though. Buy tier 1 in GLD if that's your thesis versus this low here. If GLDs hold above 158, that is your stop. Tier 1, if it starts getting above this 164, 165, that's your tier 2, and then this is the macro resistance. So right now being tier 1 if you're anticipating a higher move, and that's your thesis. I actually went long silver late last week for the first time in a while, and I'm going to use the same strategy with that chart.
Now in the long form, we're going to be jumping into the high beta tech names. Do you want to mention Amazon really quickly as a preview?
Not really. It got downgraded today after a big run. I'll go over the support levels in that long form. So tune in then. We'll have much more for you. We'll see you later.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.